Hey guys, I'm Quincy Wilson with Cummins & Company Realtors.
John Wald, Primary Residential Mortgage.
And so we're back from the new year, and so we're going to give you a market update for January. So today we're going to be talking about just the new tax law. I know there's a lot of concern about how the new tax law will impact everybody in the real estate market. So we're going to go over just a few of the highlights. Obviously, anything we talk about today, make sure you bounce it off your accountant. These are some talking points that have been given to us from the National Association of Realtors and some other people, but real estate's local. So please take this advice, take the things we're saying today, and talk to your accountant.
Perfect. So I guess I'll start with the biggest, or a big change right now is the mortgage interest deduction. Mortgage interest deduction went from, you were able to previously write off up to $1 million of a loan's interest. Now you're able to write off a maximum of $750,000 loan's interest. So it changes things, but again, as Quincy said, real estate's local, and that's, seems to be a pretty high number for us here. The other big change is on home equity lines of credits. Before, you were able to write off the entire interest on a home equity line of credit. Now you can only write off the interest on a home equity line of credit if you could prove that you remodeled a home with that home equity line of credit, and you're also capped at $100,000. So those are the two big changes that came place with the mortgage interest deduction. And then I'll just touch on too, like in regards to investment properties, there's no big change. There's no change at all in terms of what you do with your deduction on an investment property. So Quincy, do you want to touch on the others?
Yeah, so I know a couple of things, like what happens with when you sell your primary residence. So basically there's been no change in that. Yep. If you live in your primary residence 2 of 5 years, or the first 2 of the 5 years, no change in capital gains, so you're still exempt from that. I think the big change, however, is the state and local tax deduction. So everybody's talking about the property taxes. We are sort of a high tax state here. And I think this change will affect people who itemize, self-employed people the most. So the new rule is you have a limit of $10,000 of deductions. That includes both your state and local tax, your income tax deductions, yep, plus your property taxes. So that combined is a limit of $10,000. So I think that's where the big impact is going to change. So if you're not going to do the standard deduction, you are going to itemize, your total amount that you can do is up to $10,000 now with state income tax and property taxes. All right.
What do you think the effect on locally here?
The effect on your home value, basically, I think is what you're asking.
Yeah.
None, really. I mean, I don't think it's going to have much of an effect on home value. I think basically what John quoted earlier when we were talking about just the home values, our home value is not, our average home value is not $1 million, it's not $750. I think we hover, somewhere between the $250, $260 range, something like that in the metro area. So I don't think it's going to have much of an effect on home values at all, really. Yep. So none of us are really expecting that big of a change.
Yeah, and the states that are going to be mostly impacted are California, Connecticut, New Jersey, New York.
Yeah, those super high tax states where you can't find a regular house for less than that. So, all right, so that's all we have for you today. We'll have a lot of links to all the information discussed and some web links to follow up as well. All right, and if you need any recommendations for accountants, we're happy to help and point in the direction to the people we use. And other than that, we'll see you next month.
Perfect.